Are you confused with the terms multicap fund and flexicap funds? Here you go. Let us understand what is a multicap fund and how it is different from flexicap fund. Welcome to holisticinvestment.in. Based on market cap, the equity funds can be classified as large cap, mid cap and so on. Now let us focus on multicap fund. Multicap fund invest 75% of their assets in equity and equity related instruments. These funds invest in stocks across market capitalization. That is, their portfolio comprises of large cap, mid cap and small cap stocks. They invest at least a minimum of 25% in large cap, 25% in mid cap and 25% in small caps as per SEBI's mandate. The balance 25% is invested at the discretion of the fund manager based on his market outlook. Now let us see how multicap fund is different from flexicap fund. Multicaps have to invest up to 75% of their total corpus in equities and equity related instruments, whereas flexicaps can invest up to 65%. So in a flexicap fund, fund manager have more freedom to play with the remaining 35% of the corpus. The multicap funds must ensure a minimum investment of 25% in each market segment, that is large, mid and small cap at all times. Flexicaps have no such restrictions. Flexicaps could increase or decrease their share in a particular segment based on its performance and market condition at any given time. Will multicap fund suits you? What are the things to be considered before investing in a multicap fund? Multicap funds are relatively less risky compared to a pure mid-cap or a pure small-cap fund. So, they are suitable for moderate to high-risk appetite investors. Ideal investment horizon is 5 to 7 years. The risk return varies based on the asset allocation. If the funds allocates higher weightage to mid and small cap stocks, then the fund will be riskier, but the fund is likely to generate higher returns. On the other hand, portfolio with high percentage of large cap stock is less risky and provides stable returns. On taxation point of view, the holding period is 1 year. If sold before 1 year, it is short-term capital gain and it attracts 15% tax. Long-term capital gains applies if sold after a year and attracts 10% of tax for the gains over and above Rs 1 lakh in a financial year. On the whole, if you want to make your mutual fund portfolio less reliant on market cap, then multicap will help to achieve this. It eliminates the need for buying different funds for a comprehensive market coverage. The flexibility allows the fund manager to make changes in the portfolio as market condition changes. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.